So Palantir wins $480 million defense contract for AI system prototype. Palantir has been awarded a $480 million fixed price contract from the U.S. Department of Defense for a prototype for its Maven artificial intelligence system. The contract has an estimated completion date of May 28th, 2029, so 5-year contract, right? And the U.S. Army Contracting Command in Maryland will serve as a contracting authority. Last year, Pentagon published a redacted, I don't need to go into all that, okay? But the moral of the story is that Palantir, huge deal here, obviously worth high tens of millions of dollars a year, right? High tens of millions of dollars. So massive deal, like a little less than $100 million a year, right? Massive deal for Palantir. Now, what does this mean for Palantir's business model and their numbers moving forward? This means we're going to likely start to see Palantir's government-related revenue start to increase. I'm seeing them really nail down more and more deals so far in 2024. And so what we're going to likely see is, I think, a building of that government revenue, which is kind of been the actually disappointing spot for Palantir's business model. The commercial business has been booming. You know anything about Palantir, you know the commercial business is booming. You know AIP boot camps and all of that whole story, right? Phenomenal. But the government business has been, it's been lame. You know, it's really been lame, which I don't have the biggest problem with because I'm not investing in Palantir for the government side of the business. I'm investing in the commercial side of the business because I believe the commercial side of the business is going to dwarf the government side, the military side, anything like that. It's going to make it look like little numbers long term. But in terms of the biggest absolute numbers for Palantir right now, it's very important everybody understands that government-related revenue is the big business for Palantir still at this point in time. The commercial business is the big growth engine, but the big absolute numbers is government, okay? So very important everybody understands that. Now, you know, Andre, who helps me run the private group, right, he sent me over that information like he had it before like anybody had it. It was incredible. And he texted me that over yesterday, and my first thought was, you know, the stock's probably going to be up 5, 6, 7, 8% here today. And I was like, man, that's such an easy trade. You know what I mean? I was just thinking like, you know, having that information first, buying it after hours, because it came out after hours, but no one really had it at that particular time. And I'm like, dang, I could just make it easy. I ended up not, making a move off it, but because the reason I don't do that is because at the end of the day, I know me, and I know like if I do one trade, it's going to make me want to do another trade and another trade, and then I get into more of a trading mentality instead of investing, and then it leads me to all bad places. So it's like a little devil out there. But it is. I did look at that as soon as he sent me it over, and I'm like, Palantir is going to have a great day tomorrow, and sure enough, it's having a great day here today. So just goes to show you, if you're a trader, man, you got to stay up on all this stuff and all that news. You got to be able to see something like that and go ahead and buy that stock after hours yesterday, because it was easy money. It was easy money. Like, you know, a $480 million contract like that, it's huge for Palantir, and it's going to move the stock up significantly, right? Next one up here, let's talk about a bunch of stocks.
Utilities and energy are some of this year's top performers now, while consumer discretionary is one of the biggest laggards. Bringing us 3 buys and a bail among those 4 sectors, it's Jeff Kilberg, founder and CEO of KKM Financial and a CNBC contributor. But are you smarter than a high school economics student, Jeff?
I don't know, Kelly. Those cats were pretty sharp out there. Proud of them. It was great to see.
All right, let's kick things off with tech then, and semis in particular. The SMH is outperforming the S&P this year by a cool 28%. So your buy in this category is AMD. We mentioned it. It was our mystery chart into the break. Shares are up 13% year to date, and they just announced their next-gen AI chip. Why do you like it?
Well, it's borderline blasphemy, right? How dare I fade NVIDIA? But when you look at AMD, look at the pricing power or the pricing wars that are about to happen. You look at their top-of-the-line chip, it sells for about $10,000 to $15,000. The H100, NVIDIA's favorite chip out there, sells for $40,000. So I think as we see capital expenditure by all these companies come into play in Q3 and Q4, they're going to consider going about to happen. You look at their top-of-the-line chip, it sells for about $10,000 to $15,000. The H100, NVIDIA's favorite chip out there, sells for $40,000. So I think as we see capital expenditure by all these companies come into play.
So do you think AMD's chip's as good? Come on, man. Come on.
In Q3 and Q4.
Do you think AMD would undercut that much if their chip was really equivalent or better? Come on. AMD could charge $30,000, $25,000, and still way undercut and make sense. But you're only going to sell your product at a 70% discount or 60-something% discount if it's not as good.
They're going to consider going to a lower cost. Intel is in that same boat, but Intel is down about 40% year to date. So I want to look at AMD because I think there's a dispersion. There's such a dislocation. Look today, we're seeing NVIDIA up 4%, AMD down almost 3%. So I think this is a short-term trade opportunity to book profits in NVIDIA and buy AMD. But there's also a reversion to the mean, Kelly, because they will have to have some price sensitivity.
Yeah, but NVIDIA's killing these guys. I mean, we just got to call it the way it is. Like the data, the stats. The facts are NVIDIA is destroying these guys. I mean, they're beating them all over the place. Their growth rates, right? Their chips, their brand, everything. The way they're positioned in the entire AI space, I mean, they're just knocking out of the ballpark. So, AMD is definitely an underdog in this AI battle. I can tell you that. Definitely an underdog.
As people continue to spend on AI.
All right, it's a big debate. Do you go with NVIDIA? Do you turn to, as you are turning to AMD in the semi space? Let's move on to utilities then, where
If this was a football game, NVIDIA would be up like 42 to like 7 versus AMD. Like if this was a football game, for my basketball fans out there, it'd be like NVIDIA's got 110 points and AMD's got like 65 points, okay?
She has actually been an underperformer of the ETF year to date, but it's still up nearly 7%, and it doesn't have a single sell rating on the street. Why do you like this name?
Well, Duke is just a great utility we've owned for a long time. You look at nearly 4% yield. And to your point, it's a laggard. And when you think about, no one would really probably think that utilities year to date is the best performing sector in the S&P 500. So boring is sexy again here, Kelly. So Duke is a name I think you can own moving forward. Technically, it has the ability to move back above, but all the stocks that I'm trying to buy today, they're all in the red. That's the best part about this. There is a bit of a discount here. I love buying laggards. I love owning blue chip names like a Duke Energy.
So the scary thing about utilities leading, right, whether it's leading the market, just doing better than many other sectors, the scary thing about that is that usually can be a harbinger for a recession, right? Because if people usually position into utilities if they feel like a recession's coming. That's what you do. That's like playbook 101 for these folks that kind of think more shorter term. Somebody like myself is thinking long term. I don't care about rotating money to utilities, and let's rotate out of this sector and into this sector. But that's what a lot of these Wall Streeters do. And so you just got to understand that game. And so at the end of the day, if you got a lot of people rotating money to utilities and those are outperforming, it means people are expecting tougher times ahead for economic growth and potentially recession.
Up from that into the energy space, then a name that we used to talk about all the time and rarely gets a mention these days, Exxon. And it's outperforming the energy sector this year by about 6 points. As consolidation continues, reports are circulating. They're nearing a $500 million deal with Shell to sell off jointly controlled North Sea assets. Why is Exxon your favorite here?
Well, if you look at Exxon and Chevron, those are two names, those are the biggest names in the space. When you see Chevron about half the size of Exxon, I want to go with the bigger name, but look at any metric between Chevron and Exxon. Year to date, 1 year, 3 year, 5 year, you've seen outperformance in the bigger market cap. When you think about blue chip names and energy, I know it's down today. I know energy's down today, but this is the second leading sector, and I think energy will continue to prevail, not just because of geopolitical tensions. It's just the fact that we continue to need energy. So Exxon.
Let me pull up valuations on these couple stocks here. I would love to compare them versus each other. Alrighty, folks, I pulled up 1000xstocks.com here, and looking at these kind of valuations all against each other. Forward P, 12.2, 12.3, 12.9, so forward P roughly in line with each other. As far as a trailing 12-month P, Exxon has the highest of the bunch, ConocoPhillips has the lowest, but also you don't like to see when a trailing 12-month P is lower than the forward P, because that means you expect to be a little less profitable, right? As far as PEG ratio on these, Chevron has by far and away the lowest of the three at a 0.9 there. Gross margins much higher for ConocoPhillips than Exxon. That could be because of some of the business lines they're in versus somebody like an Exxon, right? Net margins, ConocoPhillips takes the lead there versus Exxon at about 10%. Trailing 12-month price to sales ratio, the lowest there with Chevron. Forward price to sales ratio, then Exxon's actually the lowest. So far, I'm liking Exxon the best. Now, current year revenue growth, okay, so we got likely negative numbers expected here for Exxon, but then Chevron's expected positive and then positive next year. So now I like Chevron the best of the bunch, right? And then as far as EPS growth goes, if analysts are correct on these numbers, then I got to say, if you force me, and this, let's say I wasn't allowed to look into the business model, I just had this to go off of. If I just had this to go off of and that's it, I would actually say Chevron's my favorite pick of the bunch. And then I would probably say Exxon after that. And then I would say ConocoPhillips of the bunch there. So anyways, by the way, 1000xstocks.com. If you would like access to this, the search feature, the compare feature, the earnings calls, all those sorts of things, transcripts, then you can go to 1000xstocks.com and you can fill out an application. We'll see if we can get you into that product.
Prefer over Chevron, and I think there's an opportunity technically, despite the fact it just fell from its 50-day moving average down $3 today. I think it reclaims that 50-day moving average, and Exxon has the ability to continue to outperform for the rest of the year.
All right, let's turn then to the worst sector so far this year, consumer discretionary. One of the underperformers is Starbucks, down 15%. They got slumping sales, high-profile board exits. They've had just a tough go generally. Some people are actually now getting into this stock. I thought I just saw that last hour on the Half with the Judge.
Yes, Belsky.
Yeah, Belsky, thank you. So you're taking the other side of this trade. You're out. Why?
I think Belsky's just a little premature here. You look at this name, it's broken on a chart. It's completely crashed through its 50-day and 200-day. But step back for a second, Kelly. Let's talk about the consumer. We're seeing a little bit of weakening in the consumer. Sticky inflation. So what is going to be cut from consumer spending? It's the mocha choca latte $8. It's whatever you drink there, whatever people drink there. I think that gets cut first. So I think you're going to see people continue to walk away from Starbucks. That's going to hurt them short term. There is value. I understand it's discount. It's not going away. But I think you can own this a lot cheaper. But if you own this for the last 3 or 4 years, it's gone nowhere but down. So this is something you want to walk away as consumers maybe shy away.
We need a bull bear.
Okay, interesting. Yeah, I think if you got more of a long-term outlook, I don't think Starbucks is a bad buy. If you're worried about short-term, there could be more weakness there, right? Imagine the next quarter they come out with even worse numbers, even a worse guide. I mean, jeez. Hey, I want to thank you for watching this video here today on the Clips channel. I want to introduce you to 1000xstocks.com. This is the most valuable service you're going to find out there. If you're an investor in the market, this is a tool that's going to help you immensely get to the next level in the market. So when you're looking at 1000xstocks.com, you're able to understand all the different metrics laid out exactly how you need them as a long-term investor in the market. So let's say I wanted to look at a stock like Palantir. I can go ahead and type in Palantir right here, and it's going to say all Palantir's different metrics right here. Let's say I want to go ahead and look at a stock like Tesla. I can go ahead and type in Tesla right here, search, it's going to give me all Tesla's metrics right there. Let's say I want to look at a stock like PayPal. Go ahead, search it up, and then it's going to give me all PayPal's numbers laid out right there. Compare feature is one of the most valuable features of any service literally in the world. And the reason being is you're able to compare 3 different stocks all next to each other in a matter of seconds. It's absolutely, there's no service you're going to be able to find something like this. So let's say I wanted to find out, what do I think is a better buy? Do I think it's Meta? Do I think it's Google? Or do I think it's, let's say, a stock like Microsoft, for instance, right? So I can go ahead, type all those in there, and then hit compare, and boom, in a matter of, what was that, a second or two, it gave me all the metrics out. So now I can say, okay, Meta's forward P is trading at this, Google's forward P is trading at this, Microsoft's trading at this, and I can go ahead and understand this on a very high level. Additionally, we have earnings calls on here as well. So if I need to listen to any companies I own or am researching their conference calls, I can do it right here through the service. So let's say Tesla, if I want to pull up Tesla's latest conference call, boom, I can play it. I can adjust the speed as well. So if I want to listen to it at 2x speed, I can listen to it at 2x speed, 1.5x. I also have the transcripts of the conference calls as well right here. We're also working on a lot of different new features behind the scenes. So if you would like to apply for access of 1000xstocks.com, go to 1000xstocks.com and you'll be able to fill out an application and go from there. Nike, just do it. There's a 4-year chart of Nike, and the stock has done a whole lot of nothing. But oh, is this one easy money? Oh, is it easy money? Okay. So let's be very clear about Nike first off, right? We all know Nike, clothing company, but it's really a lifestyle brand. Now, everybody wants to be a lifestyle brand that sells clothing, right? They're all going to pitch it as, oh, we're a lifestyle brand. There's one company that's actually been a lifestyle brand over the past many decades, and that is Nike. They are the goalpost. Everybody wants to be Nike. Everybody. Every single clothing company in the world would trade places with Nike. They would love to be Nike, okay? It's a special company. It's a true lifestyle brand. And Nike's up here. They're the pinnacle. And then you'll see, every decade you get a company or two that tries to climb the mountain, and they never reach the peak. They always fall down. They always fall down. It never fails. It literally never fails. You can go back all the way to the 1980s and you can see it all play out. And you can see how many companies have tried to get to the pinnacle Nike's at, and they climb and they look like they're doing well and they fall down the mountain. It's never been done before, and I don't see it happening anytime soon. And I'll explain why in just a moment, okay? Under Armour is a perfect example. That was a company that 10, 15 years ago, people were talking about, oh, that's the next Nike. Under Armour, watch out, baby. Well, they're the next Nike. Were they? No, they failed miserably. It's a $6 stock here today, Under Armour, right? It's literally risking going into penny stock category, right? Lululemon, there's a lot of talk. Oh, Lululemon, right? A lot of hype around Lulu the last couple of years. Ooh, they're going to be the next Nike. They're going to be the next Nike. Yeah, the stock just fell 39% in a very quick amount of time, right? We'll see if they're the next Nike. Little secret, they're likely not the next Nike, okay? Why can't somebody come in and knock these guys off the mountain, right? It's a fair question. Why can't they? Well, let me explain this to you, okay? So, all these other companies that would love to be the shoe brand that everybody prefers and the clothing company everybody prefers, at the end of the day, no one can eat into their moat. And the reason being is they built a moat around this business that no one's got enough money to compete with them, and they honestly don't care enough to really do it the way Nike's done it. So you have all these other brands, and they can be successful. They can build into billion-dollar brands, maybe even a $10 billion brand, but they can't take it further than that. Because when you're talking about the scale Nike's on, you need to spend ridiculous amounts of money on top-tier athletes around the world. You need to spend ridiculous sums of money on the leagues that run these athletes, right? And then on top of that, you still got to spend a ridiculous amount of money on marketing and ads, right? None of these other companies are willing to do that, and none of them can do that. That's why you don't see the biggest athletes in the world wearing Lululemon and wearing Under Armour and wearing these other brands. Nike is the one that is able to capture all them. They're the ones that actually have the money to do that, and they're the ones that are willing to put in that sort of money. Because I see a lot of these other brands, and they don't really invest the way they should invest into athletes and leagues and in advertising and their brands and those sorts of things. They focus too much on the bottom line and not enough on really growing that top line. Nike is, ever since Phil Knight started this company a long time ago, he really understood if we're going to build that top line into a massive thing, we've got to sacrifice the bottom line. Very similar to like an Amazon, Jeff Bezos approach over time, right? Of like sacrifice the bottom line for that top line growth. Nike's always done that. They've also built an incredibly profitable company over time, right? But that's because they've reached such huge scale on their top line, right? Now, when it comes to Nike, here's the story, okay? So earnings per share growth was very bad. They've got a bunch of basically layoffs that have gone through here recently and a bunch of cost-saving initiatives that are all going to hit Nike positively in the back half of this year and especially in 2025, right? So if you look at current year expected earnings per share growth, 24% looking at here. Next year, earning per share growth of 20% plus again, back-to-back 20% plus, right? And then on a 2-year stack, earnings per share growth is expected to be over 50% for Nike. Phenomenal, okay? That's what we're talking about here, okay? Now, the beautiful thing with Nike is this is a worldwide famous brand. This is a list of top 20 best global brands, and it's an incredible list, right? And here's the deal, okay? I could go basically anywhere in the United States and ask people, you ever heard of Nike? They would say yes, okay? I could go to Germany, ask folks there, you ever heard of Nike? Yes. I could go to Shanghai, China, you ever heard of Nike? Yes. I could go to Tokyo, Japan, you ever heard of Nike? Yes. That's the incredible thing about Nike, and there's very few brands in the world that are worldwide famously known, that you can go in tons of different countries all over the world and people would know that brand. Nike's one of the very few, literally one of the very few companies that you could actually say that for, right? Incredible. Now, we have the NBA Finals coming up here, right? NBA Finals starts next week. And who are the two superstar athletes for each team? And who are they signed to, right? Well, one is Jason Tatum. He is the player for the Celtics. He's their big name player, right? Who's he signed to? Nike. He's a Jordan athlete. What about the guy on the other side, the superstar on the other side? Well, there's actually two superstars on the other side, but the main superstar, Luka, who's he signed with? Nike, and the Jordan brand as well, right? And so here we are, the big event, right, coming up, NBA Finals, and it's going to be a Nike show, right? The Olympics coming up in the summer, what is that going to be? A big Nike show, okay? That's the incredible thing about this company. So I've built Nike now into my 9th biggest position in the public count. Only positions bigger than the public count are Meta, Tesla, PayPal, Elf on a Shelf, Amazon, Palantir, Revolve, Cheesecake Factory, and then Nike's the 9th biggest position. It's kind of relatively the newest position. I would love to build this into a lot bigger position. I would love Nike to be a 6-figure plus position over time. 100%. Nike's a sleep well at night stock for me. It's easy money. I love stocks that are easy money and I can sleep well at night. I don't have to worry about it. I don't have to stress over it. It's nothing, man. If a stock market crash happens, I'm not worried. I'll buy the dip all the way, baby. If a recession happens, big deal. Inflation, big deal. It doesn't matter. That's the sort of companies I love to be invested in, and that certainly is Nike at the end of the day, okay?